Section F is your wages. F0 represents how we would typically report the wages in question. So by project, we would talk about the wages of regular employees and the wages of specified employees. So we have to report those differently. Now, the first thing that I like to look at is how would we do it. So at the bottom of page F0, the second part, says for each project we would have the specified employees, the regular employees, the nature of their work, how many hours they spent times their hourly rate. We'll talk about how do you determine what their hourly rate is. We would then total up the cost of each project to report it as we do at the top of F0. For the next slides, F through G, or H, section 1, F1 in this case, is a little flowchart that we're going to go through here. And these flowcharts are the top 4 to 6 questions I think you need to ask yourself, if yes or if no, to properly complete these sections of the file. They're not every question, but they're the main ones that you want to address. Number 1 question I would say is, did the person you're claiming the wages for receive a T4 slip? And I've learned not even to trust my client to say who's salary and wages, because very often they'll tell me someone's an employee and they're a contractor. And to the CRA, it's very easy. It's a yes-no answer. If you received a T4 slip, you're an employee. And if you didn't, you're not. That's it. They don't really care anything else. T4 slip means on the 15th of the month, your employer takes the tax off you and gives it to the CRA, which say, if we got our money, then you're an employee. If we didn't get that money, we don't care what you call yourself, you're not an employee. And they know. They have all the T4 reportings by person. It's very easy for them to check that. The next thing is, can you allocate the work in question to SR&ED activities? Okay, so we got charts on page F3 to F6. I think F5 is the main one. That basically the direct work itself and the direct line of supervision, including all the support work for the testing, is what's in. A very important point is, does the wage include vacation and holiday pay? And I see this mixed up a lot of times. Often I'll go into a client who's been successful claiming 5-10 years, and I can add 10 or 15% to a claim in 30 seconds. I'll just say, how do you calculate your employee wages? I'll say, well, this guy had 100 hours times $30 an hour is what we pay him. I said, no, your contract says you pay him $30 an hour. But in reality, if you look at the definition of salary wages in the Act, 248 sub 1, it says it includes everything in sections 5 to 8 of the Act. If you read that, it says it includes vacation, holiday pay, things like that. So let's say if you look at a typical employee, let's say they get 2 weeks of stat holidays a year in Ontario, and another 3 weeks of vacation, that's 5 weeks a year. I'm actually paying that employee for doing nothing. But not really. What the CRA says is, no. Hopefully you get the value of that employee the other 47 weeks of the year that they're there to warrant paying them those extra 5 weeks. So the real cost of that employee is not $30 an hour. It's roughly $33 an hour. Okay, so that's going to add 10% to your wages right there, and it's also going to affect your overhead allocation. Yes?
CPP, UIC?
CPP and EI. Basically, you go on box 14, gross wages.
So those are not considered to be costs?
The employer's portion of CPP and EI are eligible if you go traditional overhead. I won't complicate it right now, but otherwise it's direct wages under the proxy method is box 14 of the T4, which is, again, how the CRA reviews it. So if you understand how they review it, you line all your numbers up, particularly if you've got a calendar year and it's easy, and just make sure that those numbers correlate. A lot of times clients will tell you, these are the employees, and the CRA is really fast. I remember a big company, there was like 300 names, and the next day they came back and said, we think these 180 people are employees, and these roughly 120 are not. I mean, they did that in less than 10 hours, and they just ran the thing, and they know who the employees are or not. And all these other people, we got a problem with. Okay? We'll talk about the benefits, actually. We'll come back to that in a second.
You can claim this benefit when it is already there.
Pardon me?
We can claim benefit when it is already there. We can claim this benefit when it is already there.
You can claim
Vacation and holiday.
vacation and holiday pay. Absolutely. That should be part of the cost.
We haven't claimed, we don't know.
You haven't claimed it yet, but you can actually, if it's 18 months, you can even amend it. Yes?
Bonuses at the end of the year, are they eligible?
Pardon me?
Bonuses?
Bonuses. Let me talk about that. Okay. So one of the next things is, thank you for the lead in, does an employee own 10% or more of any class of stock? And if they do, if you go to page F3 of your handouts, there's a somewhat confusing chart there, or confusing situation, which I use this chart to illustrate. So there's really, and a lot of accountants really mix this up too, so it's not just claimants. The CRA has made this needlessly confusing, that there's two types of employees, what they call specified employees and everyone else, non-specified. A specified employee is any employee who owns 10% or more of any class of stock of the corporation or anyone related to them by blood, marriage, or adoption. So you have to be careful. The president's son who sweeps the floor can actually get caught by these rules as a specified employee. CRA is good. They look at last names and they ask obvious questions on stuff like this so they can catch these things. Now there's two levels of costs here. There's the direct labor, okay, and then there's what we call our overhead allocation. And there's two methods to do overhead allocation. There's one called traditional, where we actually track our overheads. And then there's the one we're going to talk about here, which is we take roughly 65% of our R&D wages, and that's deemed to be our overhead. And I say roughly 65 because there's certain adjustments that go along with that we're going to talk about. So there's two levels of cost. Let's say we spend $100 of labor. So here the direct labor for a specified employee would be the $100. Okay? And we'll talk about the proxy amount in a second. So for the specified employee, the $100 would be in, but there's certain limits. If you look at our chart on F3, salary and wages are in, $100. Any bonus or remuneration based on profit to a specified employee is out. Okay? No bonus here, but to a non-specified employee, bonus would be in. All right? So the first question about the bonuses is what type of employee is it, which is why they have the two classes. So first you have to determine who's specified, then you can determine what the treatment on the bonuses would be. So here the bonus would be in, here the bonus would not be in for the direct labor. Furthermore, for a specified employee, there's a maximum 5 times YMPE, 5 times yearly maximum pensionable earnings, which for this year is roughly $230,000. The first $230,000 that I pay to a specified employee, I can claim for SR&ED purposes. If I pay that employee $500,000, and I think it's all SR&ED, I can still claim the $500,000 of expenses and deduct it as an expense, but it's only the first $230,000 that I get credits on. If I pay the non-specified employee $500,000 that I think is all SR&ED, I get a credit on the full $500,000. All right? So there's no limit on what I can pay a non-specified employee for SR&ED, only a specified employee. Yes?
What if you pay X per widget?
You pay like a commission?
Like a commission.
Let's talk about that. That would run a lot of danger potentially, and we'll talk about why. Whether it's an arm's length, forget about specified, whether now it's an arm's length party.
But on top of that, X per widget.
That may be okay if it's an arm's length consultant. Let's revisit that in section on consultant, section I. Arm's length or non-arm's length, and explain how that could go. Okay? All right. So the bonus would be in for non-specified. It would be out for specified for the purpose of determining our direct labor costs. The second thing is that if we do this thing called a proxy election to estimate our overhead for tax credit purposes is estimated to be 65% of something called our salary base. Now the salary base is the direct labor here, less certain adjustments. So just like that, so in this case, just like there's a maximum for direct labor of 5 times YMP, roughly 232,000, here it's 2.5 times YMP. So the limit on what we can allocate for overhead to multiply by 65% is roughly 115,000. So only the first 115,000 that we get the overhead allocation on as a specified employee. Non-specified, no problem. If I pay the guy $500,000, that's the $500,000 that I use to allocate my overhead allocation. Yes?
If you've got a bonus that you pay to your non-specified employee, let's say you pay $100,000 bonus.
Yes.
How do you allocate
Let me readdress that in 3 slides. I'll show you an example calculation. Okay, now the other big thing here about bonuses is, you'll notice on my chart, even for a non-specified employee, for purpose of determining the salary base, which is the amount, which is the direct labor amount, less certain adjustments that we multiply by 65% to get our overhead allocation, the bonuses are out. Okay? So in this case, for a non-specified employee, if we paid them a bonus, it would count for the R&D wages, but it would not count for the purpose of allocating our overhead allocation, what they call a proxy amount. A lot of people say, holy smokes, Dave, like, why would the government make this so complicated? That literally, a lot of chartered accountants mix this up. I've seen so many think that 2.5 times is the limit to all the, like, a lot of, not obvious, but understandable mistakes. And the answer that I got when I asked the CRA, other than it's great for guys like me, accountants, because people can't figure this out anymore, is when they first set the 65% rate, they subsequently thought maybe 50% would have been better, but they didn't want to announce lowering it because that didn't sound good politically. So in the back end, they just whittled it down to what they thought would get it to that level, okay, with all these kind of neat little adjustments behind the scenes. And again, it's tough because you want to be aware of these when you're planning bonuses and things like that. Very often people don't understand. Or the owner pays him or herself a dividend or a subcontractor fee, not realizing he or she's a non-arm's length subcontractor. Those don't necessarily count. Yes?
Based on your experience, if you go with traditional method, and so how much it roughly is 30-40% of the total wages if you don't take proxy?
Okay, the question here is, instead of taking the 65% of the total wages, what if I go traditional? And the answer is, it depends. Every company's like a snowflake. If you think your company's, I have companies that are 100% SR&ED. They don't sell anything. They're just doing research for the first 5 years. They got millions of dollars someone put in, and they're just doing research. In that case, I go traditional almost all the time, because we'll talk about it. Every expense is in, less certain expenses that are never allowed, and anything that's left over is what's in. Even if you go the proxy, you can't claim any more than that. It's called the proxy cap. So we'll talk about that in a little bit. Okay? The last thing, so everyone understand about that. Specified employees, 10% or more of any class of stock and anyone related to them under 251 of the Act. So that's everyone but nieces and nephews. Children, grandchildren, parents, grandparents, in-laws.
To recap one more time, it means for non-specified employee,
Yes.
You can use salary plus bonus in calculation. But
For the wages.
Yeah, for the
Yep.
wages. But if you're calculating with proxy method,
The salary base to multiply by 65% to represent the proxy amount.
but you have to remove bonus from it.
You have to remove bonus from those wages. Exactly
The
right.
way I was doing it, I was just removing bonus from all the calculations.
That's incorrect for a non-specified employee. And again, these rules are very confusing, which is why I actually built this chart eventually, because so many people just didn't understand.
You lost some portion because
It's not simple. And like I say, I believe it's needlessly complex because they just didn't want to lower the rate to 50%. So they put in all these weird calculations. The last part is, I like to look very briefly at the technical backgrounds of the employees. So it actually asks that now in the form. The thing that I like to do is say, what's their highest technical designation, and what year did they qualify or begin practicing in that field? Okay? Because the CRA likes to know what's their formal training and or how many years of experience in that field. So if I say a guy was practicing since 1989 and we're claiming in 2010, CRA guy can do the math to say, okay, well that guy's got X number of years experience. Right? If I say 20 years, then next year I got to keep adding one, and I got to ask, well, when did the guy first do it? So again, I'll say professional engineer, qualified in 1989, electrical. That's usually enough. So they know roughly how many years. Is this guy fresh out of school? Does he have experience? A lot of times the CRA reviewers say the best groups are a mix. You got someone with 20, 34 years experience, and then you got the new kids coming to school with all the new technologies that don't really know how to apply it, and together they develop something good. So again, provide them the information that they need to talk to the appropriate personnel on the appropriate issues.